All right, very well. Welcome, everyone. Welcome to this new session. I see a few friends there. I see a P of Pantelis. Hi, Pantelis. Will, good evening. Welcome. I can also see Todd, Desi, Shark. Oh, Shark. Leib Lopez, Adinda, Joe, Malcolm, Roland. Oh, we have a very important guy today. We have Risk. Welcome, Risk. Um, Risk is always welcome once we know how to manage it. And Doug, Kerry, BW, thanks for joining in. And we're going to start a new session of today's room. And if it's the first time you are in, I hope you are going to find this informative, interesting, and it's going to give you clear and clean information on what's going on in the markets. Today we celebrate a large target being hit as well by the pound versus Japanese yen, our 156.40, and the market has started profit taking right at that level, actually 8 pips below that level. All right, so welcome Todd, welcome FX Ambassador. GY target hit, well done FibStalker, thank you FX Ambassador. Hello Kerry, I cannot see everyone as usual from the list, but I know you're there, you're hiding in the waves of the internet. So welcome everyone. This is the FX Street Tokyo Open Live Room. It's a daily show that features real trading at the very heart of the Asian session with me, Giuseppe Basile, also known as the FibStalker. If you have never heard about me, that's okay. Just I want to remind you that I only stalk price using a selection of Fibonacci levels. I do not stalk people. Okay, so don't point your finger to me. I'm not doing that. Hello, Peter. So welcome everyone. This is a daily show from Sunday to Thursday, 8 to 9 p.m. EST. And if you are wondering what's the face of the guy who is on the other side, hello everyone, that's me. This is it, and I want to welcome you today. We're going to review some of the charts here, and well, all of the charts, and I never shy away from questions, so you're very welcome to ask questions, make them challenging. I like challenging questions. And with that said, I'm going to show something more pleasant to you, but before we get into that, let me share the risk disclaimer here with you. I'm very adamant about risk. I'm very serious about risk because this is a business. This is my business. And we all know that trading is risky, particularly trading Forex and its derivatives, futures, options, and CFDs, and other instruments with retail off-exchange transaction involve substantial risk of loss. And it's not suitable for all investors. So you might lose all or more of your initial investment. Leverage can work for you as well as against you because it magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the FX Street risk disclosure on the website. The information, commentary, trade ideas provided in this webinar should not be relied upon as a substitute for extensive independent research. We do a lot of research every day, every week. We should be performed before making your investment decisions. The material I provide is merely for educational purposes. Okay, I'm happy if you if you're not experienced. I'm happy if you paper trade these calls and the trades that we're going to discuss in this webinar for some time and get a bit of confidence. I, Giuseppe Basile, FibStalker Consulting Incorporated, FX Street, will not be responsible for any losses incurred on investments made by attendees as a result of any information in the webinar. So welcome everyone. As you know, I'm a premium contributor to FX Street. I gladly contribute some of the best webinars of the Forex world. And that's my website there, FibStalkerTrading.com, if you want to come and get additional information. There are a lot of webinars. I'm very happy and proud that they took the time to create some of the webinars that you're going to look at if you're interested in my material, and generally if you are a subscriber of the Forex FSU webinar. If you're not, should be, because it's a very good investment, especially if you're starting in trading. And let me see if it's not me I want to show you, but rather I want to show you the website here. And if you go to my page, you find a lot of interesting material. By the way, I'm not sure I also share a lot of the details of my method in the webinars. Particularly, there is the webinars in 2014. So by no means they're all, majority of them, free, open. So by no means I invite you to actually go and look at them. Now that's the reason why we are all here, and I'm gonna look at your questions as well. I'm gonna do a review this time starting from the SP500, but if you have something urgent, you're gonna tell me, and as you know, I'm always very, very happy to answer. So hello Jax, howdy folks. We're very happy for you, FibStalker, focusing on price. All right. Is that I suppose it's an imperative there. So let's focus on price. So I want to start from the SP500, if you don't mind, okay? Because although we focus mainly on Forex, I believe there is something brewing below these markets, and it's very interesting what I see here. Now, what I see is that I see, of course, a participation on the short side at the 1939. You know very well that I'm looking at the 1799, 1797 as our line in the sand. We get below that, and I believe we formally enter a bear market. There are some people who believe that we're already in a bear market. I will need to get that confirmation there. So below 1888 here, 1887, below this level, a retest of the lows is very possible. And if we test the lows, guys, you can kiss goodbye this market. Okay, just wanted to give an update on that. So let's start from the euro dollar. I see there Todd wants to review the euro dollar. So you will remember that in this market we mentioned two levels, right? And there is one level that gave us, was the highest level, gave us a free trade. Actually gave two free trades here. As you can see, there was a reaction at the level that we knew well before the fact. Indeed, we knew it 4 days before the fact. Okay, and we mentioned there are two levels there. One it's 110.80, and the other one is the 50%, the all the way back, right? So we pierced, we respected the level, gave us a free trade. We didn't lose anything, we just lost the cost of trading here, maybe a couple of dollars, the cost of a coffee, an Italian coffee, because in North America coffee, a simple coffee costs much more. But besides that, we lost this area, so there's no more interest from longs in that area. So we're gonna get into 109.60, right? Sure thing. I mean, there's very little to play about that and to joke about that. And we also have the short that is responsible for that move lower. So it's gonna push price into 109.81 and eventually 109.60. So if you didn't believe to that long and you went short, well done. I would never have done that because the path of least resistance in this market, I believe it's up, it's not down. However, if you did that, or if you were short for any other reasons, by no means keep that trade. It's not ended yet. It's going to go into 109.60, and there we will see whether there'll be real participation. All right. So if you're short this market, no need to exit at this stage. And so, Todd, I suppose you have all the information you need there to work on that. FX ambassador keeps saying the euro will be going lower in March. I still have to see that. I have no clue on whether that is going to happen or not. I think that this market has the potential to bounce at this 109.60. But opinion, they don't count. Very good, Todd. Opinions do not count in the market, and there is the Kiwi, for example, which actually bounced from a 60% level, and I still don't see this market moving lower. Indeed, I see this market moving higher. We had a bounce at 065.50, and the market threw back into that level, did not retest it, and then moved higher. So for me, the target of this market is still 300 pips above at 068.50, and this market could be testing the 50% here for a continuation higher. So see no shorts in this market. I see no shorts in this market, and FX ambassador is saying, what is your FIB saying in relation to what? So in here, we traded already and got a freeze trade in this market, and that's, as you know, for my style, is the only thing I care of, because differently from other people, I don't know what's going to happen in the future in the market. So the words must, it's not a word that to me makes sense in the market. So that's still my projection for the New Zealand US dollar, which indeed is moving higher. All this reaction lower to me are of no importance, because once I got a freeze trade here, the market can do whatever it has to do. And if we try to put some limitations on the way the market can move, like for example trailing stop, and this kind of stuff that I leave to more experienced people, I think we make a big mistake, because you have to leave the market express itself. And that's, by the way, that's my philosophy as well. My philosophy is that the trader's job number one is to manage risk, and I would add to that the second job is to obtain risk-free trades. What is a risk-free trade? Is a trade that with a very high probability gets to a price level where the gain equals the risk. At that point, I always exit half of the position. I'm very disciplined in relation to that. That solves a big issue that people have. Yesterday in New York, the question has been asked as well. There was a gentleman, I think he was an Indian gentleman, and he asked, can you, and he did not ask it directly to me, he asked this question to another speaker who was there. I was just following the session, and the question he asked was very simple. Why some people after 10 years they're still not successful in trading? What's the main reason? And by the way, let me ask this question to you, also to you, FX ambassador. What do you believe is the main reason why after after many years, people are not successful in trading. Can you guys try to write down something and try to tell me what comes to your mind? What would be the main reason why people are not successful after so many years? And then I'll tell you my version. Write it down, please. Write it down. I will wait in the meantime. Let me have your ideas. I'll wait a few seconds for the delay here. In the meantime, I read there, great. I did short this market. Very well done, Todd. So keep it to the next level of support, 100960. Still waiting for your answer. Poor risk management, Todd. Very well said. Anyone else? And you don't have good mentor early on? Well, I would agree with that. I didn't have good mentors early on as well. I didn't even look for mentors in reality. Not having a good strategy. Good point. Stuck on bad wagons. Peter. Joe, fear and greed. Discipline. I mean, all of you mentioned certainly aspects that are very, very important in trading. If we don't have a method that works, at least with a high expectancy and reliability, I mean, it is very difficult to make money. So if we don't have a good strategy, if we keep doing mistakes and jumping on the bandwagons and buy when we should be selling and selling when we should be buying, of course, as Peter has mentioned, that focus on profits, very, very good one. Who said that, Greg? Very good. Giving precedence to profits rather than risk management. Joe is saying fear and greed, and that's very interesting as well. Let me elaborate a little bit on that as well. Around discipline, will, trade mismanagement. Trade mismanagement, I mean, it definitely happens, right? But it's a skill it's an additional skill that comes after the analysis, after entering and trade, and then we can get confused. We get afraid. I mean, we are afraid of losing the gains, or we don't know, because we don't have clear in mind our trading plan. But it's something that probably comes at a more developed level of the trader. I think, I think Todd there has mentioned it, poor risk management. See, whenever you are not successful in trading, it's all about the way you manage risk. Case closed. There is nothing to add. There is nothing else to ask. It's all about that. You cannot lose money. I mean, you might not be profitable, but you cannot go broke if you manage your risk. Okay, and I believe that at the very beginning, people should be focusing on managing risk, usually because of projecting their thoughts in their trading, and they don't take into account that Mr. Market can do anything, which more than often is opposite to what we think of. Well, that's definitely true. And one way we can, thanks for sharing, one way we have is to manage risk. On Thursday, I'm gonna excuse me, I'm gonna have a new webinar on F Street. It's a premium one, and I'm going to talk about the different risk parachutes that I use. And I started with a handful of them. I ended up with 15 to 20 different risk parachutes I use in my own trading. So by no means, if you're a premium subscriber, I suggest you to join. It's going to be very, very informative. And probably I'm going to give also a complete demo of the FibStalker console, which is also one way I manage this well. I manage multiple risks with the console. And before we continue on the charts, okay, I didn't forget that we are here for the charts, but I believe it's very, very important also to talk about these things. I want to mention Joe there, who mentioned fear and greed. Absolutely true. I believe that those emotions can be kind of they can be declinated in three different areas, which is fear of losing money, but also fear of losing an opportunity. Sometimes we get involved, it happened in the past a lot to me, before we should really get involved. Now, let me make an example here with this chart, right? When you look at this chart, right, if you get involved before this 50% level is tested, you will never test whether from the larger time frame there is participation or not. So let's say if you enter here, right, let's say that the market arrives to this point and then starts rallying, but never test this level. You will never know if there is something strong enough to push that price higher. And that sometimes is the way fear of losing an opportunity materializes. Another way it materializes is when you have a market which is already pushing, extending and pushing higher, and then you want to enter because you believe that the market is going to go even higher, but that usually does not happen. So that's another way fear of losing an opportunity is declinated. And all this is part of the bandwagon theory, because buying here means to jump on the bandwagon, as well as selling here is jumping on the seller's bandwagon. Okay, so I'm sure that from an intuitive point of view, you know all these things, but then it's also important to put them formally and actually visualize them. And for this, I recommend you watch an open webinar if you have not done that already on the bandwagon in 2014. Go and search among my webinars; it's free. All right, so thanks a lot for your questions here that always give us an opportunity to clarify things that probably all of us we know from an intuitive point of view, but then we never visualize or completely understand, or even if we understand them, we never put them into practice, which is very sometimes can be very difficult. Okay, all right, back to charts. So Kiwi, we said still up. I don't care about this move lower. They have no significance to me when it comes to a setup. The setup is there. The first target is here. That's what I respect. Okay, because see, these are the swing moves where you can do 8, 10, 15 reward to risk, depending on the kind of risk you have here. If you never let the market move, you will never realize those kind of moves. All right, so you have to let the market move. And the only way I know, without using trailing stops, I hate trailing stops, because trailing stops lock in profits, but there is a trade-off between using and locking in a partial profit and letting the trade go. So if I have to choose among the two, I will always choose to let the trade go. Okay, that's my style, because when you even if 80% of the cases, which is not the case in my system, but even if 80% of the case you are stopped out at break even, and you only pay the cost of trading, and then those 20% of the cases you get these big moves, that's where the money is, right? So now that said, not everybody can trade like that, because I discovered that the majority of traders tend to be short-termed. All right, I don't know which kind of style are you, and I don't know which kind of style are you. And by the way, can you write down which kind of style are you? Just write long term or swing and intraday or short term. Let me if you are if you're willing to share, please let me get a feel. Excuse me. Let me get a feel of how how do you see and how do you trade yourself? FX Ambassador in the meantime is saying Aussie, Kiwi, and CAD are not technical pairs. I would strongly disagree on that. Of course, we need to agree on what technical pair means. If daily, that's very good, FX ambassador, because you have to join different different style, and that's good. There is the time also to be to go for the swing. There is the time to go for the small profits as well. Now, I find that the New Zealand dollar, US dollar, it's very, very technical, depending again what we mean with that. And this market has bounced right on the 50% area here. To me, that's something very, very technical and very, respects this level very, 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 very well. Also, the 50% on the daily. So, I would not agree with that, but that's my view. I substantiate my view, just not saying, saying exactly what it means for me to be a technical pair. So swing, short-term swing, long, but long-term and short-term as long as good rewards to risk ratio is present. Very good for longs. Swing intraday. And Lucas is saying, if you have time, Giuseppe, can we please have a look at the Euro Australian dollar? Looks like a nice long after a rally. There is support in that market, so let's review that market right now. And that market went to trade an area, it's trading an area of potential support here. However, this market is not a long for me, Lucas, and I explained that a number of times. And let's do that analysis again. So it might come to you, or I might try to explain the reason why I believe this market is not a short. Sorry, it's not a long. And let me find it. Let me find it there. So here we go. So I always want to start from the weekly, because when we look at the weekly, it's easy to see longs, but when we look at the weekly, that's what we see. All right, Lucas. So what we see is that the market that moved down for basically more than 4 years here, and then bounced, and then it was rejected at that 50% level, losing control in this market on the weekly time frame. Strongly believe the shorts are in control, not the longs, right? So that's the path of least resistance. Ivan Kai, welcome. Now, one might say, and that's the path of least resistance. Okay, the path of least resistance in this market is down, and no surprise that this market, the way this market has moved in, in 4 of the last 6 weeks. But I would say 5 of the last 6 weeks. Look at this. Look at this beauty. We have down wick, down wick, down wick. The market actually, this is even stronger here. The market tries to rally, and then bam, it was abated. We have only 1 week out of 6 in which the market has been growing, basically. And then again, another down week. This is not an up week. This is down week. This market tried to rally, and then bam, it was abated. And again, down week, down week. So out of the last 6 weeks, even if you were not doing any considerations on levels here, what do you see, Lucas? So I see participation on the short side, 160-20, and then that participation is going to continue here. Okay, so the first level where I would start looking for significant support, to me, it would be that level, that 140.70, which means that any opportunity to sell this market, we should take these opportunities. All right, so the euro is significantly weaker than the Australian dollar, which does not make the euro necessarily weak, against the US dollar. So we have to take these markets one day at a time, and we have to trade towards the path of this resistance. Okay, so this rally that you see here, for me, and that's my personal view, This participation is seen here. This is profit taken from the last few days short here, 6-7 days short. And also there may be a group of algos who actually are trying to test and see if this market can indeed be pushed for a larger retrace. This move higher would be a retrace. Okay, it's not a new move higher. There is no higher outlook for this market, and it's probably that even we have already tested the highs here today. Okay, so Lucas, that's my view, not necessarily the truth. That's what I see according to my method, and this area of participation here is very, very weak. Look at where the price went. I believe this price is gonna break down soon, and actually this could be an opportunity today or even now. Let's have a look at that market on our time frames here, and this market is let's see, this market is still probably trading in extension long on the 30 minutes. Let's look participation here, first target participation, extension long. So this market is trading on this time, is trading still long here. There was that participation there very, very clearly, and but on the 1 minute, on the 1 minute, this market has actually we will need a more detailed analysis here. But this market could be a short here, of course, a short into the retest of that level. So as you can see, the 30 minutes it's long and it has target above. So we need to be very, very careful before taking a short in this market. But as soon as this little sequence of measured move high, either this market pushes higher. If this little sequence fails, that's going to be an entry short for this market for a continuation lower. Very, very interesting, Lucas. Thanks for bringing that up. And that's that's where we see this market. But on the 30 minutes, there is a long below this price. As you can see, it is move higher. And now there is a structure on the 1 minute, and until that structure is in place, this market is not going to move lower. If you want a simple entry here, 152.78 with a stop above highs, that would be one opportunity to take advantage of the short. Sorry, Lucas, you are looking for longs, but this market is not a long. Very well. Yeah, I mean, it's very, very important. Lucas is saying here, sorry, I think it's because I showed shorter time frames. Thank you for your explanation. Lucas, if there is one thing that you want to bring home from today, it's never ever trade a market without starting the analysis from the weekly, because you have to discover, first of all, the path of least resistance. If you trade against the trend, it might go well. It might be a trade that is pretty short term. It might go well, but you have to know at least that you're trading against the path of least resistance. That's very important. All right. So Pankai, my friend Pankai, hi Pankai. I mean, you say, would you consider weekly pound shorts for target hit already? Thanks. Let's have a look at that. The pound has been extremely weak all over the board, basically because of the Brexit. I think the Brexit is the worst idea English people have generated in the last few centuries. I believe that they should never do that, not because I'm from Europe or I believe in the European Union, but I believe they're going to lose a lot of business from Europe if they decide to do that. and but you know, these opinions do not help in trading. So what helps in trading is, let's go and review the chart and see what's going on there. We knew that this market had to go lower, right? I mentioned that. And when we go back to, I mentioned that a couple of 2 weeks ago actually. And when we go back to the weekly, what do we see? We see a market that traded at 46.61 there, and I mentioned that this market would have been pushed lower. So it appears that but this market is not yet at targets, but it will eventually get to oh, just remove that. So this market has a larger target yet that has not been tested yet, and that's that 130. Let me it was the 139, so it's higher. Okay, so that's our target for this market, the 139.40, as I mentioned. So it's very, very close, 60 pips, and this move is done. All right, so which means that we're going to see profit taking from this market. Would this be a long? Is that would you consider weekly GBP shorts first target hit already? No, it's not hit already. It's 139.40. It has to move, and it will get there. No, no doubt about that. And may even get lower into the 138.11. And in this area, I think there'll be some profit taking anyway. But we mentioned, and this market, you know, we mentioned this level 3 weeks ago. This market got there like pound Japanese yen, same structure. So the fact that the pound versus Japanese yen has hit target doesn't mean that the pound versus US dollar has hit target. Okay, you have to take this market and consider this market separately. And let's review the pound versus Japanese yen. This beauty, I gave the 156.40 level. How many weeks in advance? 4 weeks in advance. Look at what it bounced. It bounced at 156.31.9. I gave 156.40. So, you know, you tell me if there are not algorithms watching and trading these markets, right? Now, is this a long? No, this is not a long because of the pace. This market has moved. This market can move much lower. Maybe it's going to bounce and it's going to give us another opportunity to short this market. If the bounce is a significant one, we're going to get 160-70. And if that happens, this is going to become a great short opportunity. So write that down. My screen is not clear. FX Ambassador, maybe you are in low resolution. You should use 720. Try that. You should know that because you are with us every day. So try to change the resolution on YouTube. All right. So I think we covered a few markets here. Let me do a time check and let me get some notes. So we reviewed the euro dollar, then we reviewed the euro Canadian and the euro Australian dollar for sure. And then we got into the pound US dollar, as well as we mentioned the pound Japanese yen, which reached targets. We mentioned a few weeks back. We also reviewed the Kiwi, which is going higher, not lower, and gave a pretty trade there. We discussed also the reasons why, some of the reasons why traders lose money in the market, and just putting some notes here, giving also you the time to think about other questions as well. What I want to do, I want to review the US dollar Japanese yen here. And this market, it's quite interesting, I believe. And although it's continuing lower, this market is going to give opportunities. Very technical market, I have no doubts about that. that this market is going to give opportunities. Now, this market is continuing lower, and that's okay. We don't know whether it's going to bounce and put on a sensible bounce. If that does not happen, we're going to see this market into 109.83, and after that we get the bounce. Okay, so no need to be. And by the way, look at the beauty of this. This level here, it's not the previous high. It's a level up. It's a target level where algos get profits, and that's the reason why you get the bounce, not because this is a previous high. All right. So sometimes this level lines up, and they confuse people even more. But the reality is that that's a level of profit taking. Giuseppe, do you post the notes somewhere after the session? Yes, I always post the notes after the session. I write an article every day at the end of the session. And if you go on my page, which I let me try to. This is my personal page. You should go on this page often, and you will find the information there. Let me see. Share. I'm going to show you this page where you find the articles as well. So can you see here? I mean, if you go to the page that I just linked, you go to articles or latest, and you will find the link to the article I write every day. It's a very brief article. It's a guide of the main points that we discussed, but you find also levels sometimes. And as you can see here, every day there is an article there, okay? And of course, webinars as well, Joe. You can go to webinars. There is a lot of very good information on Fibonacci retraces, as well as risk management, money management, all the important things that you need. All right. Okay, so US dollar, Japanese yen. Then let's go back to that. Let's go back to the charts here. And all right, so see, I mean, I was looking for different levels, 118, 30, 16, 40 here. The market did not have the strength to correct. Okay, so just gave up here. In a much more gracious way when compared to the pound, US dollar, Japanese yen, pound US dollar or pound Japanese yen, and so in a way this was contained. This market, and the reason for that, this market was extended already quite a lot. Do we have time for a quick look at silver? I've been checking the webinars. Thanks. Okay, thanks a lot, Joe. I appreciate that. I hope that information is useful. If you believe it's useful, everyone, and then just tweet a link to a webinar or a comment on whether that webinar was useful to you. Thanks. So I put a lot of effort in creating good quality webinars, and it requires time, really. So I really appreciate when people can, and students can actually get even a simple or a one simple concept from a webinar. I mean, it means a lot. So thank you, I appreciate that. So going back then to US dollar, Japanese yen here, the this market is going to come back eventually, and it's going to give us an extension to short. And if you keep following and joining, I'll be able to provide you with that level, and we're going to take advantage of this. Now let's go back very briefly here to see what's going on in the euro Australian dollar. It's retesting that level, as you can see, and let's see if the short are in play here. No, the short are not in play. So that level is being that level that I showed is being tested at the moment. It's a 50% level. Below that level, this could be an opportunity to short this market for a continuation lower. Okay, and we explained the reason why we would short this market below that level, because this could be an extension continuation lower, which has the potential to get into 149.63. So 152, 153 here, 149.63 is 340 pips. I think it's quite reasonable. All right, so okay, so we covered US Japanese yen. There was Gregos asking for silver. Silver is always very, very interesting. And of course, silver is moving. I look at the euro dollar as well, the way it's it's actually continuing to push lower into that 109.60, and we will see what happens there if the market gets there. The silver here, silver is always very, very interesting. I closely follow gold and silver and SP 500 because they will tell the story, they will tell the unfolding story here in the stock market. Now, this market, I still believe this market has the potential to move into 1480. Okay, this market though has also traded an extension here, which is holding. So if it retest the 1510 and bounces, that's a continuation high and extension, otherwise will come into 1480. Worst case scenario, we retest these lows here around 14, and then possibly we continue higher. Gold has been holding much better here, as you can see. And you will remember last week I mentioned that if we were to retest the 1197, and I mentioned that you can go back here to the recording, and that's the beauty of having the recording, because one has to and will be accountable when something is said. And what I said is that if we retest that 1197, this market has the potential to hold that level. Now, it was not a clean retest, so I wouldn't consider this a retest. But this market is moving laterally, and when we apply our continuation style, what do we see here at the moment? Let's make this study very briefly. Okay, so let's consider the ascending triangle here that we have, and let's then go and study and see what we have below what we have in the smaller time frame. Now, I wouldn't consider this a breakout. I would likely going to consider the higher level here a breakout, but let's see if on the smaller time frame we have something more telling, or if a different story is being said here. And I did some projection from the previous days, and let's see whether this market is telling anything on the smaller time frame. Unfortunately, we don't see a lot on the smaller time frame. We don't see something much different from what we saw on the daily in this specific case. But very often what we see is that there are other formations that are more evident on the smaller time frame, and of course, one could also make the case of if you wish, a triangle. I'm using the high here, and then a very, very aggressive other trend line on the smaller time frame, right, which should be this one. So this formation here is suggesting a consolidation on top of support, and that support was the support that we saw on the daily here. we saw this support being tested to 1197 here. Okay, so at the moment what we see for gold, and the reason why I'm analyzing gold is that silver will of course go together with gold, but in case of silver, we had this test of the extension which came 2 days ago, while the test of gold came at this previous relative high here. So, but the two markets are basically moving together. So, if gold moves lower and silver will move lower and will retest this 1508, gold is going to retest probably that 1197. All right. So now, is this a good long entry? No, the good long entry was here, where you could get a risk-free trade. Now it's too late for that market. And if he comes back, I'll really consider and study with the FibStalker time. I would study actually this move lower here and for a potential continuation higher. The market is very neat. Someone would see here cup and handle, but I don't, in the continuation style, those formations are important. In the FibStalker methods, they're not important. Levels are important. All right. So, okay, does that answer your question there? I think. See, we see this level being challenged here. Mind that below 152.78, there is a short opportunity stop above highs here. And that's something that you want to consider. All right, so that would be the trade of the day here if this market pushes to, and it will, because also if you look at the formation that you have on the 1 minute, that could be an opportunity. Stop above highs. Okay, entry 152.78. Stop 153.32. For some people, this might be a lot, but we don't trade. We trade percentage of our account, and we look for free trades. So if this goes through, this is going to be a second test. This is going to go through as well. It's going to give us a free trade. All right. So let's see. It's almost time there. So let me take another note here, and reviewed silver and gold, and so if there are no other questions, I would start a summary, a recap right now. And so we started from the euro dollar. We saw that our our continued measure move higher at 110.77 failed. This market gave two free trades, but now it's going to test the next level, 109.60. On the daily, we also showed the extension that is pushing this price lower into that level. That level is a valid level, valid FibStalker level that can be timed using the FibStalking timing technique. We then reviewed the euro Australian dollar, and this market, when we look at this market on a very, very large time frame, we discovered this market is not a long, it is indeed, it is a short. And this market is offering an opportunity right now. I gave the setup for this market, and you can trade that with about 60, about 55 pips of risk, if that's what you want to do. So setup was given here. Then we reviewed the New Zealand dollar, US dollar. Despite some different views, this market is still very technical, still in long. It's in long on the weekly, it's in long on the daily. And despite this retrace, I will always let the market move. This market has been pushed higher. It's now probably retesting. You could retest or not that level. It's not really very important. What is important is to get risk-free trades. All right, so we then mentioned one of the markets we have been following the last few weeks, the pound versus US dollar, and we showed that this market went indeed to, or it's approaching the level that we mentioned. We mentioned 39.40, it's now 39.90, so it has 50 pips to go, and it will go for sure. It will go 50 pips more here to reach those targets. On the other hand, the pound versus Japanese yen has already touched, and it's reacting, profit taking, from that very level that we indicated couple of weeks ago. I got from Scott. Thanks, Scott, for your tweet in relation to this. 156.32 as traded, and the market reacted. So congrats to all of you who have taken this position here, and the market, luckily and unluckily, it has continued lower. So only those who are positioned already actually take full advantage, and I was not. They could take full advantage of this move. And this move has started the very same time when we started our US dollar Japanese yen trade that actually pushed price lower. We made a 23 unit of risk on that trade alone. And that was a risk-free trade, so we took half off as well. Imagine if we left that in. Then we reviewed US dollar Japanese yen, and we know that this market is going to provide opportunities. It's just a matter of to wait for the right opportunity. If this market continues lower, it's going to trade into extension and then trade into the next extension short. I'm very positive about this market. I think this market has the potential to maybe offer us maybe 12 or 1300 pips lower into 170. And finally, we reviewed silver and gold. We mentioned that these two markets are moving laterally on top of extensions. The extension for silver is 1510. The extension for gold is the level that we have there, the 1197. And gold might be breaking out here on the daily and 4-hour time frame. All right, so this is all for today. I hope you enjoyed the show. I hope you I hope the information that you got here can help you in your trading this week, the continuation of this week. Also, we mentioned the trade, potential trade on the euro Australian dollar on the short side. That market is not a long, the market is a short, and we will then continue and we will see what this up and brings, what this week brings to us. I will go now, back to full-time trading. I don't trade full-time, of course. So for example, I only follow 3 session European session open at the beginning of the week. It's very tiring, of course, and that's where the opportunities are clustered. But I will go back to my normal schedule as I now have all the developments of the FibStalker console and the preparation for the New York Trade Expo in my back. And so have a great day. As I just want to remind you that I am actually planning to do a special session of my, where do I have it? Let me see. Of my FibStalker Methods coaching program. If you are interested, it's a full method divided in 3 phases as well as in 3 sections. The first phase is self-study. The second phase is a review of all the material within 14 webinars where you can ask questions. We apply all the concept to charts. And then I also have trading room, which is separate from this one, as well as I have a third part of the coaching program in which I actually help my students to become profitable first, and then I help them with consistency. So if you're interested, beginning of May, I will start this new session, and you can get a great discount here on FX Trade. So if you're interested, by no means, apply today. Have a good one, and I'm gonna see you tomorrow, same time, 8 EST, 8 p.m. EST here on FX Trade. Thanks a lot for joining.